Welcome to Biz Wire. I'm Joseph Nordstrom in Beijing. Despite a slowing economy and year after year of record-breaking sales, China's auto market is still picking up speed. The Beijing Auto Show opened this week with car manufacturers from around the world making big announcements. For example, General Motors says they will spend $12 billion on new factories in China to further tap the domestic market. On a smaller scale, the fully electric American car maker Tesla will begin producing models in China in about 3 to 4 years. German automaker Volkswagen and America's GM have been trading spots over who is the sales leader in the world's largest car market. This year, the title is expected to go to VW, but GM is fighting back with a $12 billion investment and expects to sell 5 million cars next year. GM says they've seen no ill effects on its business in China from its massive recall, which has hurt its image in the U.S. and elsewhere. GM is also pushing at the luxury end of the market and believes it will sell over 100,000 Cadillacs in 2015. The luxury space is growing quickly in China as incomes move higher. Consultancy McKinsey says China is expected to be the world's largest market for luxury cars by 2016, and that by 2025, the market for premium cars could hit 50 million. Swedish automaker Volvo, now in Chinese hands, says China will be its largest market, bumping the U.S. to second place. Ford was a little late breaking into China, but is coming on strong. Ford introduced its premium brand Lincoln just before the Beijing exhibition. In October, Ford will open 8 Lincoln showrooms with ambitious plans for 60 stores by 2016. German luxury brands continue to dominate the space as Audi increased sales over 21% to nearly 500,000 units, with BMW selling just under 400,000 and Mercedes-Benz at around 200,000. China's auto market is set to expand 8 to 10% this year, slightly slowing from 2013 when it sold 22 million vehicles, up 14% from a year earlier. This compares to the U.S., which gained 7.6% last year, selling 15.6 million vehicles. Domestic brands like Geely, Chery, and BYD have not been as fortunate in China, as buyers prefer to pay extra for foreign brands with stronger reputations. Instead of success at home, Chinese car brands are doing better overseas in countries in Southeast Asia, Africa, and Latin America. Analysts expect some consolidation among Chinese brands, which may allow them to scale up to become more competitive with the world's major players. Now, last year, for the first time, J.D. Power says Chinese auto brands were rated above industry average, and if this trend toward quality continues, consumers in China and elsewhere will take notice. You're watching Biz Wire on the Blue Ocean Network, China's first and only privately owned English-language broadcast media. Our full episode can be seen on our website, BONTV/biz-wire. Let's turn now to Neil Jones for a quick look at a few stories that are buzzing through the markets.